Google has dropped from its all-time highs by around 23% just in the last couple of months, and in the same time period, the rest of the market has actually risen, led especially by mega-cap companies such as Nvidia, Microsoft, and all the others. But Google has actually dropped so far that it's now at 2021 levels. Of course, 2021 was a stellar year for Google because it benefited massively from the pandemic. However, in 2021, Google actually had a total revenue of $260 billion. Whereas now it has a total revenue of $310 billion. But why is Google trading so low? Is it the end of the company? If you've been reading the news, then every time Google was mentioned in an article, the usual reference was that either this company was dying or that it was going to be broken apart. Now, one of the news you've surely been following is that Google has just lost a fight against a $2.7 billion EU antitrust fine. They appealed, and the appeal got rejected. Just in case you haven't heard about the story, recently it was discovered that Google and Apple had a secret partnership where Google would pay up to $20 billion every single year in order to be the default search engine in all of Apple's products. This, of course, gave insane exposure to Google, and it was a very nice passive source of income for Apple, as they didn't have to do much work to earn this massive amount of cash. It looks like this was not considered okay, and these were deemed as monopolistic activities, which actually hurt competition. This is why Google is being charged for this. But as if that weren't enough, this lawsuit just finished, and now a second one is starting in the US. This lawsuit is concerning their ad tech business. The main facts that are treated here is that Google's search business is way bigger than all of the other competitors combined. This chart compares the growth rates and the scale of the advertising business of different media providers. Obviously, number one is Google, which has been growing at a 13% 3-year CAGR. And Google as a standalone business is almost the size of Amazon plus Meta. But the fact is that then YouTube, which is coming right behind, you have to add that on top of Google because it's part of the business. So this just gives you some insight onto the pure scale and dominance that Google has managed to build in the advertising business. They're trying to argue that Google has gotten to this point and to this size without following fair competition rules. They believe that Google has gotten here unethically. The only comments that Google has said is that the reason why they have so much market share is because their product is clearly superior. They offer their clients a greater experience, a more affordable solution, way more personalized, and just the offering and the results for advertisers are a lot better than for any of the other advertising companies. And I'm not going to try to give detailed comments on whether I believe that this antitrust will rule for or against Google, because it's almost impossible to give a clear, reasonable prediction on these type of issues, because on one hand, the DOJ wants to ensure fair competition and for no companies to be considered a monopoly, but on the other hand, they want to first of all put America first, and having such huge innovative businesses such as Google, which employ massive amounts of people, bring back so much money and are at the forefront in every single country in the world, is very good for the country. And secondly, Google is not harming any American consumer. If anything, it's just enabling them. Google gives us so many tools and it has improved our way of life so much in the past 10 years, where now I cannot think about my day-to-day without using Google. I search on Google constantly. I use YouTube almost every single day. I work on Google Drive for my personal stuff. I use Gmail, I don't use Outlook. And in no case I have been actually forced to use Google. I've done it myself because I do believe it's the superior product. But anyways, we'll have to see what the DOJ actually states. So now we can actually take a look at some of the different theses out there of why this compounder just became undervalued. All credits to Stock Bros for this research. Now, I like this article because they take a different approach. They don't try to ignore the lawsuits and they don't try to minimize them. Instead, they argue that even if the lawsuits go through, what is the worst thing that can happen? That the DOJ actually breaks up Google? Well, this has happened a lot of times before. And if this actually goes through, what would happen to a shareholder is that all of its Alphabet shares will then be split equally into the different companies, and he will be able to hold Google in all its different newly formed companies. This would then generate spin-off businesses, such as YouTube on one side, Google Advertising on the other side, and potentially even Google Cloud as a standalone business, where the total value of the separate entities could even be higher than the current value of the combined entities. Now, this is because spin-offs are generally believed to create value. We have seen this with a lot of companies in the past. The most recent one being Johnson & Johnson, where they spun off a part of their business which was growing at a faster pace, and that has allowed to unlock shareholder value. And the thing is that Google has a very long history with lawsuits. In 2018, for example, they were fined around $4.34 billion in the European Union again for abusing its dominance through the Android operating system. The thing is that this company is so huge and it has done so well in the markets that it has a dominant position in almost every single industry it is part of. In 2017, it was hit with another $2.42 billion fine after it abused its power by promoting its own shopping comparison service. So this is a very similar lawsuit to the one that they're facing right now with the ad tech. However, what is a $2 billion fine to Google when their net income is almost $80 billion? And now the truth is that this may actually be an opportunity for us to buy such a high quality business at a lower price than it was a couple of months ago. Because even with new competition such as ChatGPT and other LLMs, Google is still growing at a pretty fast pace. For example, their Google Search and Other segment increased by a 13.8% increase, their Google services by an 11.5% year over year, and the company as a whole grew by almost 14%, and this is a $1.8 trillion market cap company. Of course, you then have to consider that Google is one of the most innovative companies out there, and they're investing heavily on first, the cloud environment, which is growing at a 30% CAGR, but then also AI, which could funnel their growth. Here they talk about Google Cloud. And although they're their number 3 competitor, it is already making up around 11% of the whole revenues from the company. And one of the greatest things about Google Cloud's evolution is that their margins have started to increase by a lot. Additionally, according to Canalys, the market share of the Google Cloud in 2022 was around 8%. It currently stands at a 10%. Additionally, here we have to assume that AWS has an operating margin of over 35%. So Google Cloud still has a lot of room to run regarding its profits. If they get just to half of that, they'll already be twice as profitable as they currently are. So overall, they believe that Google stock is undervalued, and I believe a similar story. I believe that all companies go through rough patches, and it's our job as investors to actually identify which of these rough patches are going to be long-standing and which of these are actually just some short-term weakness for a stock. As a long-term investor, you have to identify these and invest when the companies are doing poorly, but because it's just a bump in the road that they will eventually get past. I believe that Google is an incredible compounder. I believe that they have a lot of untapped growth opportunities, and I believe that at some point in the future, all this growth will start to rake in and weigh in on the company. Of course, their balance sheet is impeccable and they have around $111 billion in cash and short-term investments. So they're ready to pay any fine that the DOJ can actually give them. But the thing that I like the most from this company is their free cash flow generation, where we can see that in 2019 they had $25 billion in free cash flow, then they had 35, 2021 they raked in 47 billion, 2022 50 billion, and 2023 58 billion. So I believe that this is a very good company, and I'll be watching from the sidelines because if it keeps dipping, I'll be sure to jump on the boat. Thank you for watching. As always, this has been the Cashflow Compounder. Join the Patreon for extra content, and there is a link in bio for a free stock if you join Trade Republic.